Hey everybody, it's me, Gregory Mannarino. And yes, I said I wasn't going to do a video today, Sunday, December 23rd, 2018. But honestly, I can't stop thinking about what is occurring here in the world financial markets right now. And I want to put a little light on what's happening and what will likely happen very soon, unless something dramatic happens. So, look, it's no secret. These markets here in the United States are under a lot of pressure. And the stock market could be thought of like this. It's being attacked on several fronts. We all understand that it's in stupid land with regard to valuations. It's off the Richter scale. Doesn't make sense. Hasn't made sense in a very long time. And this is, a deliberately engineered environment. It's no secret. Look, last week, Fed President, what was his name? Richard Fisher actually came out on live TV, CNBC, explaining how the Federal Reserve has deliberately inflated the stock market bubble by suppressing interest rates. I mean, this guy's too big of a name, I guess, for them to rush him off. But this is a Fed president here coming out telling the truth. And it is the truth. Look, here's the absolute truth. We are in a global debt crisis. How many of you out here remember the European debt crisis? Do you remember all that talk about the European debt crisis when the markets were melting down the last time, 2008? What did they do to fix it? They didn't fix the debt crisis. They just added more debt on top of an already crisis situation. That's exactly what we're doing here in the United States right now. This is why we don't have a balanced budget. We have no budget whatsoever. This is why our debts and deficits continue to explode. It's all fake. It's all being propped up. And you can see how this is being manifested in the yield curve. Something I scream about all the time. People need to be watching. But no. Everyone's fixated on the stock market. Look here, don't look here. The bigger thing is the debt market. It's insane how distorted it is, how twisted it is. And again, we're watching the manifestations of these distortions play out on a global scale. The amount of propping up that has gone on now for over a decade by world central banks, their respective leaders, who really, you have to sit back and say, what's actually going on here? Why is every single world leader, every one of them, playing the same game with their central banks? Keep rates suppressed. Keep rates suppressed. Don't raise rates. Don't dream of raising rates. I mean, they're all doing the same thing. But look at what's happening here. It's a fake environment being propped up by this mechanism that has been in effect now for over a decade. So here's the situation, just very simply. We are in a global slowdown. I'm not making this up. Even if you were to watch the mainstream financial channels, the confederacies of dunces, they're trying to tell people, we are in a global slowdown. Meanwhile, they're freaking out that stock markets are dropping. The current valuations of this stock market, again, are in fantasy land. And if we're slowing down, if the global economy is slowing down, industry here in America is slowing down. In fact, it's almost grinding to a halt. This is no secret. It shouldn't be to you. So how can we sustain where the stock market is right now, no matter how much cash they print out of thin air? Even if the Federal Reserve were to completely reverse course and say, okay, you know what we're going to do? We're going to drop rates in the negative now and print until your eyeballs explode. It won't help. It won't help at this point. We've reached almost a critical mass, in my opinion. Something I've been talking about for the longest time, a point of maximum saturation with regard to debt on a global scale. You understand? This is a global thing, but most people have no idea. Most people are dreaming that everything is just fine because they are believing the lies that they are being fist-fed around the world. It's incredible. It really is. Now, one thing I forgot to mention yesterday, and I should have addressed this, on my Saturday little Markets to Look Ahead segment. This week, you're going to see a lot of volatility in this market, and I would not be surprised to see this market take a big hit, and I'll tell you why. Let's put this together here. End of the year, all of these, the investment banks, the hedge funds here, they're going to want to book losses for this year that they can claim for next year. So they're going to look to sell their losers. I think this has the potential to cause a lot of volatility in the market this week. And again, it does not mean that once this settles out that everything's just going to be fine. It's not going to be fine. We are in a crisis mode here in the United States and around the world. Debt is the issue, and the currency is part of the debt. So this is why we have to take action. Action must be taken now. And I've covered this, how it can be fixed, what needs to be done, the pain that's going to follow no matter what happens. Either it's going to be X or it's going to be XX and probably XXX. You understand? It's very simple. But so I really want people to understand where we are in the grand scheme of things and how this potentially can play out. And so this is something, again, I have addressed for years. If you look at what's happening here to the yield curve, it's essentially flat right now. Okay, we have a little inversion rift. The whole thing is practically flat. So this is a big tell. I mean, even though the mainstream financial channels, they actually have people that are parading out that want you to ignore the yield curve. They say, oh, don't worry about the yield curve in this environment. What are they talking about? Because we're watching a global slowdown and the yield curve is flat, soon to invert if we remain on the same trajectory that we are right now. It's telling us. The yield curve is explaining, people, there's a problem. We are slowing down and we're moving more towards not just a recession, but more like a depression because of this the debt environment that we are in at the present time. Aggressive action needs to be taken, and I've explained this to you, how it has to work. I'm not going to cover it here. If you're interested in seeing what I said, my suggestion, for all of you that have seen my video with, I said something radical needs to happen, please direct people over to that or go to my YouTube channel and search out the video where I said something radical has to happen. It really does, and we can't wait. We are literally at a point where this thing has the potential to come down rapidly now, just real quick. So we understand we're getting the flat yield curve. It looks like it's going to invert. This inversion to me, this is the perspective I want you to have. It's almost like a bow and arrow that's being pulled back. We're building up energy, which is going to release. So the yield curve will go like this. In the environment, unless something changes, this is how it's going to play out. Yield curve, invert. It'll keep going. And then at one point, when investors, governments around the world, when people start to realize that the debt cannot ever be paid back, it's too monumental. It's absolutely, even if we were to take gold and revalue it to $10 million per ounce to try to pay back the debt, on the global scale, it wouldn't be enough. It would not be enough if you have to look at the layers of derivatives that are underneath it. We are in the quadrillions. The quadrillions. That's what I want people to understand. Forget about what they're trying to tell you. First of all the debt is leveraged. It's leveraged debt, so it's at least 10 to 1. So when you're hearing of a national debt here in the United States of 22, 23 trillion, times that by 10. And then you got to look at all the leverage bets under it. It's insane. And all the off-balance sheet stuff, world central banks buying each other's debt, propping this entire thing up. It's unbelievable. This is why when I sit back and I explain to you how absolutely off the Richter scale this is, I can't even get my own head around it. It's too big. So anyway, going back to what I was saying, so the energy that's being pulled, it's pulling. All of a sudden we're going to get a snap. Then we're going to see, or we have a potential to, if nothing changes, for the debt to sell off. And I mean sell off so rapidly people's heads are going to spin. As this sells off, you're going to see yields spike, not drop, but spike very, very rapidly. As yields spike very, very rapidly, cash is going to bleed out of the debt market, which is going to put an enormous amount of pressure on the stock market. As this is happening, we will end up in another situation where we get a credit freeze, which means you try to go to your bank, there'll be no cash available. We're going to get bank runs. You're going to start to see bank runs again, panic in the street. Everything will grind to a halt. Grind to a halt on a global scale. Think about the pandemonium in the streets that this has the potential to cause. Again, we've seen this. In 2008, we had a credit freeze. That's why the Fed stepped in with quantitative easing 1. And they should have stopped there, but they didn't. We had quantitative easing 2, Operation Twist, and still debt suppression till this day. The Fed's not magical. They can't just say they want to keep the yields low, and it's not just the Fed. Every other world central bank, they have to print cash out of thin air, add it to a digital screen, and buy the debt. China hasn't been buying our debt for months, but they are buying our soybeans. You know that. Look, I could go off the deep end on this, but I won't today. I want to keep this as real can be. And I don't mean to scare anyone, but this is the scenario. Look, I have been called a perma bull as of late. A lot of people, oh, Greg Mannarino is a perma bull. I'm telling you right now that we're in trouble. This market is in trouble. There's no doubt about it. And if you could put this all into perspective, understanding the dynamics of this, it's very easy to follow how it will go. If we remain on the current trajectory, if something is not done soon, I'm talking like within weeks or maybe even a month, something has got to be done. Dramatic action with regard to the currency, at least here in the United States. I know, around the world, something needs to be done too. With regard to the debt, I explained to you what I sincerely believe would work, but it needs to happen. It needs to happen now. Anyway, I hope this makes sense to you. If what I have said does make sense to you, please let me know. Write a comment here, or just say, Greg, you know what, you're completely out of your mind. Everything is fine. There's no problem in the debt market. The currency is great. Stocks are fairly valued. And if that's your perspective, please explain that to me too, because I would love to learn. But to me, and I would imagine to most of you out here, if you look, I'm a big picture guy. You step back and you look at what's going on around you. It's pretty simple to understand that this is no man's land, where no man or woman has gone before. And there's going to be a price to pay that I don't believe people are prepared to pay on a personal level. And it's always the middle class who gets hurt. And that's what's going to happen here too. All right, look, again, long video. I think I covered some important things here. And this is going to be it, at least until tomorrow morning. I will see you in the morning. We'll talk about these markets at that point. Try to make some sense of what's going on here. I made some major changes, by the way, to my website. If you want to go look at it, there's a link in the description of this video. Anyway, with that said, I'll see you in the morning. Thanks for listening to me, and share the video if you think it's important.